Welcome to Swimming with Allocators,
the VC podcast from the LP perspective,
with your hosts, Alexa Benz
and Ernest Sweat. You ready? Let's dive in. Welcome to Swimming with Allocators. Today, we are so pleased to hear from Vishnu Amble, the founding director, trustee, and investment committee member of GreenBear Group. This is a single-family office and a mission-driven investment platform. I am thrilled that we're going to get to talk to you today, Vishnu, about your global experience. You've lived on 6 continents in 12 different countries, the rise of values-aligned investing, and what you're looking for in managers today when some of this sustainability or impact is a little less out of favor, what you're still interested in and why. Welcome.
Thank you. Thank you for having me here.
To begin, we'd love to hear your path from traditional finance to this globe-trotting career that you've had. Would you mind giving us sort of the highlights?
I started my college career in the dot-com boom, which then busted era, and in semiconductors. So I attempted to study electrical and computer engineering at the University of Michigan. And this is also where I had met the entrepreneur whose family office I run currently, was during college, and I was helping out. I wanted to work there in a startup. I didn't want to be in school. I wasn't very excited about sitting in a classroom. I wanted to get to work quickly and get my hands dirty. And that was a fascinating experience. But dot-com boom had busted. No one wanted to be in tech. Mm-hmm. Certainly no one wanted to be in semiconductors at the time. And so I was fortunate to have some connections in financial services, did some internships with investment banks, and took the traditional finance route. Without really any training, I didn't train in any accounting, Excel modeling, any of that stuff. So it was just some engineering background, expertise or experience in tech. And then I joined an investment bank and then made my way through private equity, but always covering technical industries.
What kind of impression did you make at such an early age?
It was just, I knew this person was working on a startup. There was a connection to a Japanese tech company. So remember, Japanese companies cut down research and development in the 90s after the peak of the market there. And, there was a lot of IP that was lost. And I was just fascinated with that. And knew this entrepreneur was working on something. And I said, I don't care what it was, but I want to be part of this. And I don't want to go through school and just sit and fall asleep in a classroom. And so I kept persisting, said, I want to work with you, an intern, whatever it is, but I want to do this. And this was in 1999 to do this. And so that's how this all originated. And then brings me full circle back to where I am here. So it's interesting, and really, when I think about, and just for anyone, just taking lessons learned, I had a CV that was very confusing. I had done tech, I covered utilities, I had covered semiconductors and software, and these are totally different types of industries. And now you're really seeing them come together, right? I mean, everyone's talking about power generation, utilities, the consumption of energy from data centers, the use of microprocessors, the sophistication. That convergence is now fascinating. It really rolls in and integrates my career experiences at this time.
You mentioned the convergence of, and Alexa brought up in your bio, you've lived on a ton of continents, ton of countries, and now you've worked in a lot of industries. How has that all shaped your LP perspective?
I want to compete at the highest levels. I want a seat at the table. I know I'm not going to be the best investor, the best fund manager, the best operator, the best at technical BD, or insights, the best financial modeler. So I'm not going to be on the court. I'm going to be on the bench if I'm on the court. So what am I going to do to have a seat at the table with the best? How am I going to compete at the highest levels? And for me, it's network and market knowledge and insights. And this is what I have done for 20 plus years and really weaving that together is being able to talk about markets around the world. And so when we back managers, when we see them, I say, I will bring you a network. I'm not going to be the best on the investment side, or I can, advise on best practices. I can put you in front of the right people, but it's a network. That's what I'm bringing, and it's anywhere in the world. And that allows me to have that seat at the table with the best out there. It's not because I'm a great fund manager, deal maker, and that stuff. I just trot along. But I don't want to be in that junior varsity class. I want to compete in the professional leagues.
You have worked, internally at giant corporations. You have worked at smaller startups. So I think it's also a great reminder to our audience, primarily of GPs, that the person you're talking to may actually be smarter on this topic than you are. Particularly given that you have a lot of lived experience on some of these trendier topics around AI. So with that, I would be curious to hear, you've made at this point, it sounds like about 10 manager investments. And is there a story you can share there of an investment that you've made and why, or what was compelling about the manager you selected?
So yes, it's over 10. That's direct on the seeding side, and the idea, and then we've done staking directly as well, and then now more so through funds, through managers, and then we'll co-invest alongside. But the idea is we're not just traditional allocators, right? We're entrepreneurial investors. So it's, again, the partnership. How do I come in and partner with the best, take them to the next level, but bringing complementary skills to that group? So they may be great investors, great operators. I say, how do we institutionalize you? And how do we take you to that next level? And capital is a big part of that, right? If I say, if I'm in Hong Kong, so there's 31 insurance companies in Hong Kong, 23 primary insurance, 8 reinsurance companies. If I go to Hong Kong and I say, here, you know what, manager XYZ, they have a very attractive profile for these insurance companies. We get together 15 to 16 of those for a dinner or luncheon, and it's remarkable what you see from that. If I have to believe the manager, but I tell these people, I'm in, you should come in too. We're all aligned here. And yes, do I see value accrual if they raise money at the management company level? Absolutely. I'm unabashedly capitalist. and that is the objective, and you can do great things if you can, if you have great access and great performance, right? Then you can have great impact. You can fund these missions that we have, but you really have to separate. This is something we've learned over the last 20 plus years, is you got to separate the two, right? So what is the objective, and then what are you trying to achieve? What is that impact? When we've tried to put those together, we've really struggled.
How did you determine, even wanting to start a seeding program, or, your movement into the U.S. venture market more now as well? Like, how did that process come of like, hey, we see an opportunity, we need to leverage it?
So what we learned working in a startup that had a lot of downs, some ups, many downs, very challenging. Then we tried backing startups, saying we couldn't do it necessarily right operating. Let's try to back startups. We tried different models around that. Did not work. It's tough, right? Startups are tough. So I said, okay, you know what? Let's do this with managers. It's a little more de-risked. And then let's just think through how we can add that value to increase the probability of outsized outcomes and decrease the probability of just substandard or sub-beta outcomes, let's say. So that's how we transitioned over time, just taking lessons learned. We're not, just backing startups was very challenging. And so just taking those lessons learned and incorporating and say, okay, again, where is our seat at the table? Why should I be sitting at the table? And as soon as we realized what we can do, what we can't do, that was very important. Same thing with how we operate now is outsourcing many of the functions. A lot of people think they can do it themselves. You've got HR issues, you got IT issues, just organizational issues. Now with costs and the just model that has of outsourcing that's working, plus you have firms that are really on the cutting edge of what's happening with AI, how AI can be integrated, and how tech can be integrated to advance the outcomes of these allocators, family offices, etc. Trying to do it in house is just very difficult.
Yeah.
And I think that's really important. It's just again knowing what you can do and can't do. So putting your ego aside and say what is the outcome that I seek, and what is the best way to achieve it with the highest probability of success versus failure. That's really, and then manage expectations.
What should we all know that LPs are telling each other right now?
So I'm active with the Institutional Limited Partners Association. And on the messaging board, it feels like over half the time, people are asking each other about IT. What's the best solution for whatever objective in that journey? CRM, to maybe reviewing memos, reviewing documentation. It's just a constant, and no one has an answer. And this is, for us, is so important. I mean, we're using solutions from 2 decades ago that just keep getting augmented, but certainly not optimal. We're overspending for it. I could cut costs down 60%. And again, if I outsource too, I can cut the cost down. And in doing so, I could be much more efficient. I can reinvest that capital. And I can work with a firm that'll be at the forefront of tech development.
Who's building that? I wouldn't, but we'll get them on as a sponsor. We'll find them for you, Vishnu.
So you'd be surprised, like how much OCIO firms are investing in IT.
Mm-hmm.
Wow.
It's really an important element. And this is what family offices and similar allocators are seeking. But it's just a matter of, can they do it in-house? Do you want to build all that in-house? Then you have the person leave.
Yeah.
They want to start their own firm. So turnovers, we're long-term capital. I can't have people turning over or seeking short-term objectives. We're compounding at long-term rates. That's why our IRR is so important. And our objectives are crystal clear.
You spoke about how you went from building a startup hard, then investing directly in startups hard, to then going to something that's also very hard, diligencing humans in an overcrowded market of venture capital. How did you develop like the expertise in that, and how do you have your framework to make sure you're always getting better?
So it goes back to building on lessons learned and knowing what you can do, what you can't do, and then empowering those who are better than you and partnering with them. And so constantly say, okay, I can't do everything. I don't want to be the jack of all trades. I want to be the best at what I can be, and then bring that to complementary partners. And also, what's your risk tolerance? So I always found we found that fund management was relatively de-risked compared to a startup, at an actual startup, or backing a startup directly and really concentrating. Why not work with several companies through a fund management platform? And that was the idea. Again, risk tolerance. So my risk tolerance has gone down significantly. Where I may have had, we touched on this earlier at Alexa, there was no concept of work-life balance, right? It was just constant, everywhere. And that has really changed over the past few years particularly. And what's that balance? And now knowing what I want, what I don't want, what I'm good at, what are the priorities, I think it will be much more effective. But the risk level has changed dramatically as well.
What are you looking for in fund managers these days?
So this is another great aspect of this industry that I've learned is what are those, who do you want to work with, right? And it's all relationship driven. So like the best, let's say the most effective introduction or connection to a company, a manager, et cetera, is from other investors, other LPs. So I constantly try to build relationships with other LPs, exchange notes, say, hey, I'm aligned, you're aligned, and they have to be aligned. This is also very important. If it's like a public, no offense, but if it's like a public pension, there's politics involved, right? Short-term thinking, misaligned with my interests. It needs to be long-term investors. So other family offices, potentially insurance companies, certain foundations. I'd like to say endowments. There's just a lot of tension right now in the endowment world.
Yeah.
You're going to have a lot of people changing over. You're seeing it already in the foundation side. So groups that have tenure and are not constantly turning over is really important. And that I'm sitting there at the Capitol 12 years, 17 years down the road, and with the right aligned partner. And that's really a challenge. But keep building that group, and those referrals are so important. And it's just qualification of people. Because frankly, financial analysis, reviews, I can outsource that.
Yeah.
I'm pretty comfortable with that. But it's the people element that's really important.
Now we're going to take a quick break to speak with our sponsor.
Hi, I'm Jeremy Rich, Senior Vice President on the Catalyst 2045 team at SVB, a division of First Citizens Bank. For over 4 decades, SVB has been the financial partner of choice for the innovation economy. We understand the unique needs of founders, fund managers, and investors building in fast-moving, high-growth sectors because we've been there every step of the way. Through the Catalyst 2045 team, we work closely with venture firms and institutional investors to help them grow their platforms, raise capital more efficiently, and unlock new opportunities across the venture landscape. When you work with SVB, you're not just getting a bank. You're gaining a partner with deep sector knowledge, extensive networks, and tools to help you scale. We're proud to support Swimming with Allocators and the people shaping the future of venture.
And now back to our LP interview. There are plenty of people right now that have impact at the core of their fund thesis who are struggling to fundraise. How do you recommend sort of withstanding some of these ebbs and flows of, I guess, the wind is not necessarily at your back right now if you are a climate fund or if you are a fintech fund. How do you recommend withstanding sort of the ebbs and flows of these topics?
So what's really important, and I believe the market speaks for itself. So if fund managers, if I'm in Singapore or Tokyo or the Middle East, and fund managers are coming all the way from the United States, and it's not, they're not there because of asset gathering, which is fine for a strategy or several strategies. And so there's a place for that. But if they can't raise capital in the broadest and deepest, most sophisticated capital markets landscape in the world, they have to come all the way overseas. Something already is just challenged. Just in that. Something is, we need a filter, right? If there's 10,000 plus fund managers out there, there needs to be a filter. I should be chasing those managers. Mm-hmm. There's 2 right now that I'm trying to close with. I'm chasing them. I had to get their top LPs to refer me. I had to do a presentation to them. I had to say what value I'm bringing to the table. I'm chasing them. That's the hard work in this industry. Yeah. If you want to be successful, if you can't raise in your backyard, something's just not right. But the market speaks for itself, and I believe in that. And yes, I'm going to miss some things in the cracks, but you have to have a filter in all this, and it's really important. And so the climate on this impact side, a lot of people there were dollars available for themes. But these people weren't successful operators, investors, fund managers, frankly, anything. I don't want mediocrity, especially if the S&P 500 is going to generate around 10% annually. And I don't even, 10% is great. I need 7 to 8 annually, and that's already, why would I take risks and have a portfolio of investments that are below cost in year 15 because they raise dollars on a short-term basis? It goes back to that alignment. I'd rather make as much money as possible through the primary investments and then effectuate that impact. That being said, we have and there are some great managers who are just fund managers, right? They're successful fund managers where they focus on themes that we're passionate about, whether it's education, whether it's climate. So it's possible, but it's fund manager first.
Yeah.
That's really important. Not, hey, I'm going to get a box checked. Let's do this together. I'll get some capital. Let's hope for the best. Doesn't work. Or not for our interest. And you're going to see this really gestate over the next couple of years, 3 to 5 years particularly, of these managers really struggling.
What do you think, when so many times we talk about the narrative of, as Alexa mentioned, hat in hand fund manager of like, can I have some money, please? But there are instances of like, when you have a correctly sized fund, you have a lot of interest, you have the track record. What should you be considering then as a fund manager to have the right team of LPs backing you.
So that's like, what is the alignment with you as the manager and those LPs? So are they going to flake out on you? Do they change people annually every few years? Are there politics involved? What is their cost of capital? For example, I love Japanese markets and the Japanese LPs. I think it's the second broadest and deepest capital market base in the world. But they have turnover every 3 years at the end of fiscal year, March end. That's a misalignment right there, right? Is that healthy for the manager and the LP base? Their cost of capital is much lower. Is that also, you could also manage, as a manager, financially engineer your way to having a safety net where you bring in all LPs with a low cost of capital because they want dollar exposure, or just bring in corporates and strategics where there really is, they don't even understand cost of capital. I don't want to be in that LP base with them. But the manager can, essentially it's like financial engineering in a different form. They can create a baseline there of different cost of capital and play a game around that as a result.
You've got a lot of personal experience with what is motivating for LPs in different parts of the world. They're picking sort of a favorite place where you did some fundraising of your own. Are there any tactics you can share of maybe it's raising in Singapore, maybe it's raising in Tokyo? What worked for you that was culturally relevant?
Frankly, it's just being there. Persistence. It's a long-term game there. I've been in these places 20 plus years, constantly, at the cost of my personal and mental sanity. But I have been in these places and just constantly meeting people.
Poor Midwestern Vishnu is like, I just want Thanksgiving, like the real ingredients of a normal.
I just want to see another Bears game that they lose, right? I mean, there's times I crave that and sitting with some Chicago style pizza and forgetting about all this other stuff. But just that persistence and having a plan around that. That's really important. And saying, look, I want to follow people who have capital because I'm coming in with the other approach. Access to capital and networks, as opposed to being the deal maker or the operator, and bringing that to the table and then putting my own capital alongside. But it's that persistence. Now what we do is just good relationships in key markets, and they continue to foster, and I'm there every now and then, short trips, but I can connect with them remotely. And it's also just building on the brand that I have established, and now, as I say, foundation, and just building on that going forward and having a balance around this, because otherwise, it's unsustainable to try to do what I had done previously and, admitting that, but now saying what are best practices to really get the best outcomes that I seek, and being mindful of that risk parameter that I'm in.
Vishnu, it's been clear, the couple conversations we've had and even this episode today, that you put a priority in building genuine relationships, no matter how far you have to travel or not to do it. Can you speak to how that's going to be an advantage as we get more into the world of automation, AI, and people thinking they can just zoom their way into building relationships?
What's really interesting? That there are AI, say AI or whatever tool. AI is loosely used phrase. The tools that are available out there in the market that you can utilize to analyze any circumstance of life. I mean, you're going to get a 70 to 80% plus comfort level. It is absolutely fascinating. It's also scary, right? You can use AI to do get some very, very, dark insights as well on people, whatever it may be. So you got to monitor,
Yeah.
and somebody say, I just don't want to know what technology is going to tell me.
Yeah.
But how to leverage those tools and partner with groups who are at the forefront of tech development, and then utilizing that as a partnership. So, as I mentioned, OCIO costs, they've over-halved in the past 6 years. It's pre-COVID to now. Over-halved. So from, let's say, 60 to 70 basis points, and I'm internally at about 60 basis points of costs, just way too high. How to get it down to 15 to 25 is very reasonable. Then you weave in technology. You're looking at a 10 to 15 basis point cost with technology. What happens with human capital? this is also something that has to be assessed. What's your human capital requirement? But the amount of tech out there is really fast, and it gets me, again, back to that. That complements me with then the relationship building, the human element. And I can be much more effective than having 10 people in Singapore, a bunch of consultants and some back office people here in Florida. So I could cut most of that out, I believe, if not all.
You have spent a good chunk of your career in infrastructure and energy. Is there anything you see in your crystal ball these days when it comes to investing in these spaces? Obviously, infrastructure has been so hot the past maybe, 12, 18 months. Any sort of red flags you see or opportunities?
So believe in cycles, and that, okay, if you take traditional energy, through cycles, there's always, so when I was starting working, oil prices were plummeting, natural gas was peaking, this is pre-fracking, and people just said, energy, you don't want to play this game. Funds were really underperforming, and utilities were just regulated. They were boring. It was a boring industry, right? Totally a boring industry. Now, energy is the hottest topic. Traditional to renewable to the combination, the energy systems, very important. Energy will always have its space. It doesn't need to be fusion. You have SMRs, you have just different topics of energy, and that convergence of tech and energy, and then the capital to support that is really, it's as important as ever. I think we'll continue this trajectory on a secular basis in its importance. And it's not just a hype area of discussion. It's a fundamental item of just continued economic growth and development.
Wow, it just seems like everything is the key to. I guess the theme of this episode is convergence, right? And being able to see different domains just like blur lines with each other. With that, where do you think over these next 10 years that will be the biggest opportunities for early stage investors? What do you want people to start looking at? What do you think they're looking at too much?
Yes. So for early stage themes right now, I think it's still back to just deep tech science. Where was it in the dot-com boom and bust era? Microprocessors, biotech, healthcare, et cetera. Same thing. So those are themes that we want to play. Yes, there are several other, just continued digitalization, use, but that having that science in venture is so important. And then as capital markets also re-rate, cost of capital expectations re-rate, you'll have that appropriate stack where growth capital comes in, pre-IPO capital comes in. I think there's still a cost of capital inversion, but you will have this re-rating of the capital stack. And again, to fund that innovation. But it also goes back to venture there's only a few opportunities. There's a lot of capital out there.
Yes.
Only a few opportunities. I want to back the best people. The markets speak for themselves. And this is what I find is a challenge on seeding emerging managers, is because the selection and the markets, I think, is very efficient. It finds the best. These funds raised like that, they don't need incubation. They don't need a start, the market finds them. And because outsized outcomes are so concentrated, and there's only a few managers that can attain those and outperform traditional asset classes or competitive asset classes, you really have to, it just goes back to this concentration across the board.
In conclusion, I know you're a student of history. We talk a lot on here about our reading lists or what we're listening to. I'm curious if there's a particular lesson from history that you think is relevant to the markets today, and maybe it's something you picked up from a favorite book or something that you've heard recently on a favorite podcast.
For me, it's actually just if you study United States history, and there have been challenges throughout United States history, right? Significant societal, structural, political challenges, and it remains the place for entrepreneurship, capital markets development, value creation. You still have this, immigration. For example, Singapore, the reason why it's turning into Switzerland is there is no immigration there, right? You can't be an entrepreneur. How do I if I want to back a theme around the the South Asian entrepreneur, I can't even hire or keep people in Singapore of South Asian descent because there's always some visa sort of challenge. I want to back them in a place where I can hire them and hire the best talent. And relatively speaking, the United States is still the best, and we've seen this, the challenges through cycles, but we see this value creation, right? I mean, we took a view that after the dot-com boom had busted, that the U.S. had peaked. And so that's why we invested heavily in emerging markets, particularly in private markets. And that trade was incorrect, frankly. We net certainly lost money, and the United States continued to innovate itself in different manners, whereas emerging markets really, really struggled. Yes, there is economic development in these countries, but are they suited for fund managers? Fund managers who can outperform relative to risk to, just cost of capital, let's say U.S. or European markets. So this is something to look. So I'm in the U.S. We believe in the U.S. We believe in the American story and the opportunity, and we're going to continue to back that.
That's awesome. It sounds like, I don't know if we talked about this, Vishnu, but I read last year, The End of the World is Just Beginning. And the thesis on, even despite all the challenges of America, it's still, this next century might be the actual American century, given the cost of globalization was not producing things anymore. And so if there is a semi-deglobalization, there's probably opportunities there.
In this chaos, there is opportunity. And if you're going to back opportunity, it's in the United States.
Yeah. Well, I don't know any better way to end than that, especially in today's time of chaos. But Vishnu, is always great to hear from you. Thanks so much for being on the podcast.
Thank you, Earnest and Alexa. Really enjoyed this.
See you later, allocator.
After Portfolio Tile, investing with a smile.